Welcome to the Old Wealth, New Wealth, True Wealth podcast. I am your host, Nathan Barkocy. In the True Wealth community and on this podcast, we are passionate about creating time freedom, impact, and purpose through real assets and real relationships. Because true wealth isn't solely what you have, it's who you become. Welcome back to Main Street Media Network. We are here now with Ken McElroy.
Yeah, nice to be here, guys.
Pleasure's ours. Glad to have you on.
Yeah, thank you.
Of course. And if you don't mind, I'm going to introduce you really quick. Ken McElroy is a renowned real estate investor, author, and educator with over 2 decades of experience in multifamily and commercial real estate. As the founder and principal of MC Companies, Ken has acquired more than $1 billion, that's billion with a B, in real estate assets across the United States. He's best known for his best-selling books, including The ABCs of Real Estate Investing and The ABCs of Property Management, which have helped millions understand how to create wealth through cash-flowing assets. Ken is also a key member of Robert Kiyosaki's Rich Dad team and the leading voice advocating for financial education and ownership over dependence on traditional systems. It is my pleasure to introduce Ken McElroy.
Yeah, thanks,
guys.
For
joining us.
Good to be on.
Thank you, Ken. Yeah, thanks for being with us. So I'd love to dive into real estate.
Yeah,
I mean, as much as we can. This is going to be so much that we can get into. I privately hold a townhome portfolio out in Fort Worth, and I'm working with M1 Capital to raise funds for a medical flex-based development in the DFW Metroplex. So I focus on medical-focused real estate. There's so much real estate to get into, whether it be multifamily, single-family, medical, office space. I mean, there's commercial. So I'm curious about your insight for a new investor that's just getting started and wants to get into the real estate sector. What would be your first step?
For a new investor?
Yeah.
So the biggest mistakes people make is who they invest with. Mm-hmm. That's the biggest one. So, during this last run, there was a lot of newbies going through programs and syndication programs and all that kind of stuff. And they just tapped into their network, and then they brought their money to people that were new in the business, and that didn't work out. So the biggest issue that an investor has is to pick the right horse, pick the right team, make sure there's lots of experience, make sure they've been through their ups and downs, make sure they have a deep bench, all of that stuff. Typically, the seasoned investors are also passing on most of the deals. Mm-hmm. So, like, for example, from 21 to 22, I only bought 2 projects because for various reasons. But in the last year, I bought $600 million. So,
right.
In actually this year so far. So there's a time to buy and a time not to buy. And so the inexperienced investor or the investor, they need to be super clear on the team.
Right. And you're talking about the right time to buy. That means that there's times when you go into the market where you're going to make mistakes, right? And you're going to have some problems. If an investor goes in and does make a mistake, that shouldn't be the end, right? They need to just be able to keep moving forward, pivot, and adjust their investment strategy.
Well, if they got to look at why they made the mistake. Mm-hmm. So that's the biggest issue is, everyone makes mistakes, right? It happens
need to,
all the time, right? That's the only time you really learn. Right. You don't really learn when things are going great. Right. So, the investor needs to look at why they made a mistake. And then from there adjust to whatever that means to them. Of course, markets come in and out of favor. So do real estate types. They come in and out of favor based on a number of factors. Mm-hmm. But I think that the new investors, they need to do their own research, right? They need to make sure that whoever they're investing with, that their money's being treated well. Like for example, most people put their money in a retirement plan or wealth management or whatever, and they don't really know where it's invested. Right. So they can't do that with real estate. They actually really need to understand it. They understand, is it the right market? Is it the right person I'm investing with? Is it the right debt? Does it really cash flow? Did they underwrite it correctly? Where's the market heading? What's the exit? How long am I in the deal? Is it a cash out refinance? Is it a capital gain strategy? There's so many things. Who's managing it? Do they know how? How are they returning my capital? How often? There's a zillion things, right? So, that's all part of the selection of who you entrust your money with.
Right. And mentorship really falls into that, right? I would recommend mentorship as the number one step for anyone starting off, because it's easier to learn from the mistakes that you have made in your billions of real estate than for me to make it on my first deal, right?
Yeah, mentorship's important. Again, it just depends on if you're talking about for real estate, then you owe it to yourself to do a lot of due diligence, for conferences, and then find people that are actually doing it, right? And that they can become your mentors, and you don't even have to invest. You just have to ask a zillion questions, right?
Right.
And just kind of draft off of them for a while. That's what I suggest. And then, and some of those turn into long life friends, and some of them are short-term mentors, but it's just information, right? But I'm a big fan of mentorship and coaching, of course, right? I've been doing that my whole life.
If I could also just interject as well, my first deal was 152 units, which we just recently closed this year. And the reason why I joined that team was because I like the team. I like how they operate. They do their due diligence. They leave no stone unturned, pretty much. And after knowing them for quite a long time, and as well as I do, relationships are at the core when it comes to syndications, joint ventures, fund of funds. But for someone like a newbie investor or unsavvy investor just starting out, how important it is to know the team, get to understand the team, what they're looking for, and then develop that relationship, because you just don't want to go into a deal and not know who the team is. So kind of delve into how important the team is when it comes to multifamily or just investing in general.
Well, anybody can hire a bunch of people and get a group together and then go out and find something. The real issue is what happens next. Like, how do they manage it? Am I going to get a return on my money? Is the underwriting that they did correct or not? So it's all BS really until you own it, and then you're producing cash flow or you're not. The investors, I think Mike Tyson said, everybody has an opinion until they get punched in the face. And, it's kind of that way with real estate, right? Like you literally, you sell everybody on your vision, on your team, on your deal, on your cash flow, on your future, and you do it all through a business plan, and they trust you. And then after that, does it work or not? Right? Period. Do you return the cash flow that you said you were going to do in the first year, second year, third year? Are you managing it the way you thought you were going to do? Is it turning out the way you said it was going to be? That's all experience and team. So if your team can pull all that off, then you got a good team. Right. But if they don't, then they suck, right? So that's how that kind of works. It's like, it's all just BS until it actually, rubber hits the road, right? What's the real math? Like, what's really happening?
Right.
Am I getting a return? Am I getting a check or not? And if I'm not, why?
Why? Right.
Yeah. That's at the end of the day, that's how everyone should be evaluated. Right.
Which is interesting, because you were discussing, how a lot of people have their money in some sort of plan where they don't know what's happening with their money or any of that. This is what Main Street media or Main Street capitalism is really focusing on, right? Is it's getting the passive reliance on Wall Street, turning that into more of the active ownership on Main Street.
Yeah. The American public in general has just been duped.
Right.
They don't teach money in school. They turn it over to Wall Street almost entirely through retirement plans and savings accounts or insurance policies or pensions or whatever. You just pick a category. And then there's somebody else that manages that money for them. And that's how the system is.
Right.
So you don't really know how that, you look at your quarterly statement, it either goes up or down. You don't understand the fees. You don't really even understand what it's invested in. So I've been doing Main Street investing for almost 30 years now, and it's been great, because there's a tremendous amount of people that need to be outside of that system.
So what is your number one advice? We've been asking a lot of advice for, a first time investor or someone starting. What would then be your advice for someone who I mean, he's established, right? They have income coming in. They need to be able to place this capital somewhere to move forward on their first real estate investment, but they're very established as is, right?
Yeah, I guess it just depends on the circumstance of the individual, but and their time, right? So I have a lot of friends that run big businesses, and they don't necessarily have the time to real estate invest, but they want the tax benefits and they want the cash flow, right? So that's one type of a person. And then you have another one that maybe exits, and they have a big tax problem, for example, and then they come to me and they want to invest a whole bunch of capital, try to figure out how to reduce their tax legally. That's another one. And then you've got some that just completely do it passively. They just give me like 250 grand here and there, for our individual deals, let's say. And so I think you got to meet people where they're at, right, and what they want to do, and really educate them on two things. When people are your guys' age, you're mostly focused on income, cash, passive income, and we use those buzzwords a lot, right? Most people don't really know what those mean.
Yeah.
That's pretty normal for your age. And then you get to be my age where you've done that, and then you now have a tax problem. You guys don't really have a tax problem. But the people in my category, they have a tax problem. They have a lot of tax, and even if they sell a home or they sell a business or whatever, you've got a tax issue. So it depends on what hat. You got to meet the people where they're at, and who are you talking to, and what are their needs? What do they want, right? And so I find that that's why I love the real estate game is you can pretty much do anything.
Right.
You can take whatever position you want. You don't just have to jump out of your job and start investing in real estate because there's risk with that, especially if you don't know anything.
Which is what tied me up. I invested passively into a lot of deals, and being young, right? You said it, cash flow was important, and all of my deals locked up my capital and my disbursements aren't coming out. So I had to create cash flow. So that's why I started a real estate restoration business, because that's a cash cow, right? But you have to be able to pivot. So I guess the advice then for someone moving in is understand where you are, right? And have your objective goal in mind, right? A definite action.
And short-term discipline at your guys' age is important, right? It's easy to the shiny object stuff, new cars and fast cars, more cars, fast women, fast cars, big houses, all that stuff. That's what you guys, that's the new thing. All right. Well, it's not new though. It's every generation your age just did that. It's just different. You just don't see it on the internet. I went through it. Everyone goes through it. And then, that's what new money does. And then eventually you realize, oh, shoot, I should have been a little more disciplined. I maybe shouldn't have sold that deal. I had a lot of equity in that. And yes, I bought this, but I bought this new Ferrari, but now the Ferrari's worth half. Or whatever, so, you start to look at money a little differently. Is it working for you? Is it making you money? Where can I move it? And, instead of buying a hot car, maybe you buy a hot piece of real estate that pays for the car. It's just how you think.
Right. Yeah.
So you start to think differently. In your 20s, it's different. It's fun. It's actually really fun. Like you guys, you don't have the burden of a lot of people, the families and the kids and the, all the bills and, and the big burn rate. You might think you do, but you just wait. Right. And then what happens is you go through different cycles. Right. And then at some point it's preservation, transfer of wealth. How do I transfer stuff to my kids who are your guys' ages, right? Different issue, right? And if they don't know shit, then it'll all go away quick, right? So, there's always something to learn at every age.
I definitely want to touch upon what you said, too, about discipline, because discipline, it all comes up here with mindset. I mean, when I was just starting out, I'm like, oh, my acquisition fee is going to pay for everything, and, it's going to do this, going to do that. Oh, my God, I was a fool. But even my friends were saying, oh, you'll be rich in 6 months. No. And they think that cash is fast. Like, yeah, you may be cash flowing day one, but that has to build. It's a very delayed gratification kind of play. And I know my generation struggles with that, where they want the fast cars, fast women, the big house.
Course.
Absolutely. And I get it, but you need to have things like Kiyosaki said, don't work for the dollar, work for assets, right? Build that asset so you can do the things that you want. So I kind of want to touch upon the mindset aspect of it, because there's a lot of mindset that comes into not just real estate, but entrepreneurship in general. What kind of mindset shifts do you have, or these key mindset things that keeps you going and built your business up from ground up, pretty much?
Well, it's just education from the beginning. You know, you can either take a cash flow path or a capital gain path. Like, you just got to decide, and it doesn't have to be one or the other. It can be kind of both. But I know I've watched in many cycles, house flippers just get crushed. You know, they're making bank for a while and then they get crushed. You know, right now the realtors are getting crushed, right? Because they were selling houses like crazy when interest rates were low, and now guess what? Title companies are down, mortgage companies are down, realtors are down, renovation people are down, home inspectors are down. Like, everything's down. That's normal, actually. The cycles are normal. So you know, a lot of people don't really have much of a plan at all. You know, they're like, I'm going to renovate this house, I'm going to make a bunch of money, and I'm going to go to Cabo, right? I mean, that's normal. That's actually more normal than not normal. So it's the same thing like when they get their tax check, if they get a refund, or somebody wins a lottery, or you see it with NFL athletes or NBA or you know, MLB or whatever. You see that their first check, they've never made that kind of money before. What do? It's pretty apparent. So it's the same whether it's real estate or whatever, right? Like, same age as you guys, right? So, you know, sprinkle $1 million, $5 million, $10 million onto somebody like that. What are they going to do? They're going to do the exact same thing that everyone else does. So what you have to do is you have to teach those people, and usually you can't. Like, they have to burn through that first one, right? Usually, I mean, there's nothing wrong with spending money. It's fun. Then making money is fun too, but and then I think it's then after that, right? So I typically get contacted by, let's say, professional athletes after they've been in the league a while. You know what I mean? They've already done a lot of that, and they realize that they're getting older, and these young guys are chipping at them. So they're like, "Oh shit, I better wake up," and then they come to me. That's almost very, very common. It's the same thing. You know, you guys are just in it early, and you know, you're learning early, and you've got the epiphany early, right? So you're lucky. And I think that so it's you know, you're in the minority though. Like, all your friends they don't get it. They don't understand what you're doing. They don't understand what you're saying, right?
Very much.
Yeah.
Yes,
So,
true.
okay. So that's normal. That's still that way.
It's the value of your time, right? And that's what I keep telling people is, when I'm in college, you know, you still got to hang out with the boys. So you go have fun with the boys. I still have to be with my girlfriend, you know, number one time. She's my wife now. So you have to invest into that. But then when they were out playing video games or wasting their time, I was studying real estate, constantly studying real estate. And then I was working with Josh McCallan with Accountable Equity, and I was his assistant, and gaining so much information, you know, as he kind of brought me through how he was able to build up Accountable Equity and Renault. And so learning all of this stuff, that's where you're giving your attention, right? So time is your most valuable asset, and then utilizing your time to focus and give your attention to something specific, as opposed to just going and blowing it on something fun with, you know, the
Absolutely.
other 26-year-olds, 20-year-olds that are out there doing that. You know, we're building a real estate portfolio which will allow us to be able to go have that fun eternally.
Yeah, yep.
Right?
All your buddies will be flying on your jet.
Yeah, that's right.
It's okay. Like,
Yep.
it never stops though, guys. I'm just telling you, like, you know, you're a minority in your circle. I'm a minority in my circle, and I'm in my 60s. You know, everyone still goes and gets a job, works hard, puts their money in a 401k, a pension, retirement. That's okay. That's the majority. So, you know, it doesn't all of a sudden change. You know, the only thing that's changed is you,
Right.
right?
That's right.
And that's all you can control.
100%. And if I could also add on to that, there's a story my mother told me a long time ago, which now I understand completely. Father gives a boy a newspaper. He's like, "Listen, I'm busy with work. Go, you know," tears up the entire newspaper. He's like, rebuild this entire newspaper from back to front, and then we'll talk, because father was busy with work. Kid's playing around, he's getting tape, he's putting it all back together. He's like, Dad, I'm finished. He's like, how did you do that so quick? He's like, there's so many pages, and everything. How did you put all this this image together? It was an image of the world. He's like, well, on the back there was a man, and I already know what a man looks like, so I put them all together. And he's like, well, what do you mean? He's like, if I put the man together, then on the other side the world will be right. So that was a huge mindset shift and a mindset story when I realized once you put yourself together, then the world is right. Your world, your inner circle will start to become right.
Yeah, and you start to attract like-minded people.
The right people.
That's
exactly.
how I met Robert. I was already investing, and my buddy's like, hey, this guy just wrote this book, Rich Dad Poor Dad. I go, I've never read it. And he's like, you should read it, and I'll set up a meeting. And so I grabbed the book because I read a lot. And I'm like, damn, it's a pretty good book. And I met him the following week. And I knew right when we met that I was very aligned with him. And I never knew him before that. And so that's the thing. That's what will happen. You guys will accumulate people that will be aligned with you. And they'll learn a lot from them too.
100%.
Yeah, and that's how this works. And meanwhile, you leave your high school and your college, and a lot of your other friends kind of behind, even your family.
Yep.
Not in a bad way. I mean, obviously, I'm still friends with everyone, and but they don't get it.
Right. That's right. And that's what they say, right? If you want to be a billionaire, put yourself in a room with 4 other billionaires, and you'll be the 5th. Right?
That's one way.
Yeah.
I love that saying.
Think like they think.
Right.
Yeah. You are who your 5 friends are.
Yeah. So surround yourself with that, right?
Yeah.
And
it's always been that way. Change your circle, change your friends, change your life. Every time. It works every time. Environment is much stronger than will.
absolutely.
I love that. I'm going to use that. Put in my little repertoire up here.
Yeah.
But I know we're coming up to our time. Is there anything you'd like to share with the audience, whether it's a book or a program or something you're working on that you'd like to share with the audience that they can also tap into?
Sure. Well, they can check me out at kenmcelroy.com, KenMcElroy.com. Right now, we're buying a lot of apartments. We do a lot of land development. I have a media company, a publishing company, so we publish books. But we also have a billboard company. I'm buying billboards, digital billboards. So yeah, I've got a lot going on. Just check it out.
Awesome. Ken, thank you so much
Thank you for your time, Ken.
Sure, man.
Thank you so
Nice
much.
to meet
This
you
is great.
guys.
Thank you for listening to the Old Wealth, New Wealth, True Wealth podcast. This is Nathan Barkocy, and please remember that tomorrow is never promised. So I encourage you to go make the most of today.